This is going to be one of the most requested videos that I get, and that is investment banking interview questions and answers. If you're thinking of applying into investment banking or considering investment banking, then this is going to be the most important video that you can watch. Because it doesn't matter how smart you are, how many internships you have, you can still fail your interview. You're always just one wrong answer away from failing your interview. One wrong word could mean tanking your interview. So in this video, we're going to go over exactly the kind of questions you need to prepare for and the kind of answers that we expect from you. So for those of you who are new to this channel, my name is Nasir. And a little background about me: after my Masters in Finance and Investment, I went straight into investment banking as a mergers and acquisitions analyst in central London. My coverage area was TMT, specifically cross-border mergers and acquisitions. So let's just jump straight into it. Your interview is going to be split up into two categories of question. The first category of question is going to be technical questions, and this is where the vast majority of candidates struggle and they fail. Technical questions are broken up into 7 to 8 different areas. You have accounting questions, finance questions, valuation questions, mergers and acquisition questions, LBO, brain teasers, economics, and general investment banking awareness. Now, the other category of questions are going to be behavioural and fit questions. And the questions that I'm going to be going over are some of the most commonly asked questions, so you have to know these. And that is, walk me through your resume. Why do you want to be an investment banker? Why do you want to work at this firm? What qualities do you need to succeed in this role? What are your weaknesses? Where do you see yourself in 5 years? Which other banks are you interviewing with? What investment banking groups are you interested in? What are your hobbies? Do you have any questions for me? Now, some of these questions are tricky questions. So for example, tell me about your weaknesses, or what are your hobbies? Now, even though we're asking those questions, but that's not exactly the kind of question we're really asking. So let's go through them. Oh, and before I begin, this is going to be first round interview questions for analysts and associates and interns. Now, I often get asked, are the questions different from interns, analysts, and associates? Now, they are and they're not. From an intern and analyst level, they're very, very similar. And that's because whenever we recruit interns, we're looking for potential analysts out of that particular cohort. So the kind of questions that we ask analysts and interns, they're 90% similar. Now, associate level questions, they're different, and we're going to go over some of them. By the end of this video, you are going to be in the top 90% of candidates because you're going to cover a lot of the commonly asked technical questions and behavioural and personal fit questions, and you're going to know exactly how to answer them for your interviews. Now, for the questions that we don't have time to answer, you can find all of them in the investment banking interview guide, where we cover 700 different questions, from online application questions, the actual first round interview, second round and final round interview questions, assessment centres, super day guides. You can also find resume, CV templates, cover letter templates, and a database of over 10,000 investment banks for you to contact. And don't forget to check out the 13 mock interviews from leading investment banks for roles from internships, analyst, and associate roles. The first question, which you're guaranteed to get, no matter how many interviews you've had, no matter how many different banks you've interviewed with, is going to be, tell me about yourself, or walk me through your resume. You have to ace this question. This is arguably going to be the most important response that you give, so only spend around 2 to 3 minutes giving your story. And this might be your only opportunity to tell your story the way you want it. And these few minutes will also set the tone for the rest of the interview. So if you do a good job on this question, then you're going to have the interview on your side, but do a bad job, then your interviewer is probably going to challenge every single response that you give from now on. So how do you answer this? Well, firstly, you need to start in chronological order. Most candidates start with where they were born, where they went to school, and what they studied. Now, don't just read your resume, because as an interviewer, if I wanted to know what's on your resume, what's on your CV, I would just read it. What I want is context behind your decisions. Why did you choose to study at this university? Why did you choose to major in this field? Why did you choose to intern at this particular bank or this particular company? Why were you interested in engineering? Why are you now interested in investment banking? You have to give context behind your decision making. Don't just regurgitate everything that's on your resume. That's not what we're looking for. And make sure to look for cues from your interviewer. If your interviewer seems engaged, then give more details. But if they seem put off or they seem distracted, then just move on to the next point. And what is equally important here is your narrative. So not only are you giving background on yourself, you also have to give context as to what has led you to this point right now and why do you want to be in investment banking. So for instance, you might mention that you first got interested in investment banking because of a lecture you attended, or because you networked with investment bankers during your internship, or because your sibling, your brother, your sister, your friend went into investment banking, and after a while, after them just talking about investment banking, it made you interested in the field. Or was it during a work experience you worked alongside investment bankers and you assisted them on an M&A deal, and that's what got you interested in mergers and acquisitions? Your response here has to be investment banking specific. It can't just be about finance in general. I've made a specific video answering this specific question, but if you want to see multiple answers for this question, multiple sample answers, then check out the investment banking interview guide. And always make sure to avoid red flags. And red flags for this question is a story which doesn't make sense, a story which takes 5-10 minutes to explain it, and a story which seems to not be in chronological order. So avoid those 3 pitfalls. So after your walk me through your resume question, the next immediate question tends to be, why do you want to be an investment banker? And this question is only asked if it's not already answered during the first question. So always make sure to have an answer prepared just in case for this. And your answer for this question has to be investment banking specific. And I cannot emphasize this enough. I've heard a lot of responses which are just about finance and not investment banking specific. And as you guessed, they failed. This is a very important question. If you don't know why you want to be an investment banker, then chances are you're not going to be a good investment banker. You have to make a really strong case for why you want to be an investment banker and talk specifically about the industry. And you have to give a unique response, because most candidates applying to investment banking, they're pretty similar. They all went to the same school, they all had the same experiences, they all have good grades. So what separates you from all of them? What makes you unique? What makes you more qualified than everyone else to go into investment banking? Weak responses to this question is, I really enjoy the field of finance, or I've enjoyed my finance modules in university. That's not good enough, because that doesn't separate asset management, equity research from investment banking. Because every single field in finance, you could justify getting into them because you enjoy finance. It's not investment banking specific. Neither is because I want to consult and advise companies, because then you're not separating from management consulting and investment banking. Management consultants, they advise. Now, even though at the MD level in investment banking, you might get some minor consulting privileges, but that's not what you're going to be doing on a day-to-day basis as an analyst or associate or intern. So saying that you want to advise companies isn't a really good response at this stage as to why you want to be an investment banker. And before we talk about some good responses, let's talk about some really silly responses. Never say you want to be an investment banker for the money. Even though you might mean it as a joke and you and your interviewer might get along, never joke around about this question. And also, don't say that you don't need to sleep and that you can work all day and all night long, because no one wants to do a pitch book at 3 in the morning. No matter how much you might like to work, no one wants to do that. No one wants to be in the office for insane hours. Third, don't say you want to advise companies. I've heard this response over and over again. And this response, if you put it in the right context, which I'm going to show you, is correct, but most of the time, 9 out of 10 times, it's put in the wrong context, because simply advising companies is management consulting, not investment banking. So if you want to say, I want to advise companies or eventually advise companies, then that's fine. But don't say, I want to get into investment banking so I can advise management directors, advise companies on what they should do next. So now, let me show you a sample answer. After talking to a few people in the industry, I have been really drawn by 2 aspects. Firstly, I see it as an incredible learning opportunity. I know that with the number of hours I'll be working, I will essentially be gaining 5 years of work experience in only 3 years. I also know that this job will prepare me for anything I decide to do after for the rest of my life. Additionally, I expect to thrive in an environment where I am rewarded for my performance, rather than just showing up. I look forward to having the chance to take on responsibilities at an entry level and prove my value through the quality of my work. I know this job can be extremely difficult, both physically and mentally, but I am ready for the challenge. Other questions you can get on this is, why should we hire you without any work experience or without any industry experience? This is pretty common if you don't have any previous investment banking experience. And again, you can find the answer to this in the interview guide. And other questions is, what do investment bankers do on a sell-side M&A deal? What do investment bankers do on a buy-side M&A deal? What do investment bankers do during an IPO? So make sure you have those responses ready. So now let's move on to technical questions. And the first set of technical questions we're going to look at are going to be accounting questions. Now, as a junior investment banker, you don't have to be an accountant to get into investment banking, but you do need to know basic accounting rules and accounting treatments, because on a day-to-day basis, you are going to be dealing with financial statements and financial metrics. You're going to need to understand how the income statement, balance sheet, and cash flow statement relates. So you do need basic accounting skills and knowledge. Now, during your interviews, you're going to get behavioral question and technical questions from left, right, and center. So it's not going to be just technical questions and then behavioral questions. It's going to be a mixture of both. So this is why I'm literally mixing those questions up. So let's talk about the kind of questions you should expect for your accounting part of the technical questions. Now, rare questions, these are questions which are rarely asked, and this is only asked when the candidate is really weak and probably not going to get in. And that's just to see if they even know about accounting statements. So what is goodwill? What is cost of goods sold? What is revenue? Where would you find revenue? What are the three financial statements? Those are rare questions because everyone in investment banking, every interview assumes you already have this knowledge. Frequently asked questions are going to be on accounting treatments. So what are the accounting treatments for leases, for goodwill, for deferred taxes, as well as accounting metrics? So when you're in investment banking, you're going to be using a lot of metrics on a day-to-day basis in order to explain the value and position of a company. So what's the price to book value, PE multiple, EBITDA, EBIT? You have to know these. Now, very common questions are, how the three financial statements interrelate. So if depreciation were to go up, how would that be reflected on the income statement, balance sheet, and cash flow statement? So let's take a look at some of these questions. Now, question number one, very basic question, is walk me through the three financial statements. Here you can start with the income statement, which shows your revenue and list all of the expenses. All the way to the bottom is your net income. Your net income is then the first line item on your cash flow statement. Now, your cash flow statement adjusts for non-cash expenses and shows you cash flow statements from operation, from investment activity, and financing activity. And at the bottom, it shows you the ending cash balance that you have. And that is then linked into the balance sheet under the current asset section. Now, the balance sheet shows you a snapshot in time of the economic resources which is available to the company. And it follows a simple rule of assets equal liability and shareholder equity. So now let's look at a very common question. If depreciation were to go up by $10, walk me through the changes. Now, in our interview guide, we have a written and graphical format of this question and the answer. But if you check out our investment banking course, we also have a video walkthrough of all of these questions and answers. So now let's take a look at other kind of accounting questions which you can expect. So walk me through the impact of an asset write-down on the financial statement. If a company changes from a LIFO to FIFO, how will that impact the financial statement? What is net working capital? Where would you put a convertible bond on the balance sheet? If convertible debt gets converted, what is the impact on the balance sheet? How do you calculate free cash flow? And again, all the answers are in the interview guide. So now let's move on to another behavioral question, and this is a very common question. Why do you want to work at this firm? This is going to be the third most important question that you get asked. And this question is so important that you're going to get asked this question during your interviews as well as information sessions as well. A lot of candidates overlook this question, but if you can properly answer this question, you can easily stand out. To properly answer this question, you have to do some research, and you have to either do research online or go to the company's presentations, recruitment events. Whatever event is taking place, go to them and take notes, specifically on the company's culture, their history, and the areas in which they specialize in or they have a big presence in. So for example, if you go online and the company is always boasting on how they have a global presence, then one of your reasons could be, I want to join a company which has a global network so I can work on cross-border M&A deals. And if you meet someone during one of these events and they say they really enjoyed working at this firm because of the team culture, So one of your responses could be you want to work at a bank which really has a strong team culture because that's really important to you for your development. And that's something you would really take into consideration when you're choosing a company to work for. Alternatively, if a bank has a strong presence in tech M&A or healthcare M&A, and that's the area you want to go into, then you can just say that. Now, always finish with you really want to work in investment banking because you network with other investment bankers and you get along with them really well, and your personality fits in with them. Because that shows that, one, you've networked with investment bankers and you know how to communicate with them, and three, finally, you know the lifestyle of investment bankers because, again, you've networked with other investment bankers. Now, if you're applying at a boutique bank or at a middle market bank, then always emphasize that you want to work at an investment bank which has an entrepreneurial feel and one which is going to give junior investment bankers, analysts or associates a lot more responsibility and exposure earlier on, and that you enjoy learning on your own and you can learn fast. Because the difference between boutique banks and bulge bracket banks is pretty much standardized training program, but boutique banks is pretty much learn on the go and you really have to develop on your own. So if you can acknowledge that and say that you really enjoy that aspect, then great. So now let's take a look at a sample answer. I have actually done a lot of research on Lazard. It was founded in 1848 and was a private company until 2005. While you're a small firm, you still maintain a global presence. You have two main divisions, asset management and financial advisory, and you are one of the most respected players in the M&A world. According to my alumni contacts, you maintain a boutique feel with small, lean deal teams, which provides great experiences for analysts, but you still compete with the likes of JP Morgan, Morgan Stanley for large M&A clients. So other questions you can get asked, which is similar to this one, is why not X bank and why this one? Why not stay at your old bank? Were you rejected? And again, to see all the answers, then check out the investment banking interview guide. So now let's switch our side to technical questions and let's take a look at finance questions. Now, if you're going to be going into investment banking, which is finance, so you will of course expect to get finance questions. So rare questions are going to be on the more complex items in finance. So Black-Scholes formula. What's the formula behind it? What assumptions underline the Black-Scholes? You can even get put and call questions. And although this is rare, but if you have studied finance or if you are from a finance background, then you can get this. But otherwise, you won't really get this type of question. Now, more frequently asked questions on the topic of finance is going to be on major finance theories. So CAPM, beta, weighted average cost of capital, internal rate of return. How do you unlever beta? How do you relever beta? What are some of the assumptions that underlying CAPM? How do investment bankers use CAPM? Now, more commonly asked questions which are almost guaranteed to come up are capital structure questions. Now, this is extremely important. A lot of candidates fail on capital structure questions, and a lot of the questions in finance are going to be based on capital structure. How does a company finance its own operation? What are the pros and cons between debt and equity offering? How do you get from enterprise value to equity value and vice versa? What's the difference between unlevered and levered free cash flow? When would you use which? So again, to get all these questions, take a look at the interview guide. So now let's take a look at some of these questions. A very common question is, what is EBIT? What is EBITDA? So how would you answer this question? EBITDA is an acronym for earnings before interest, tax, depreciation, and amortization. It's a good high-level indicator of a company's financial performance. Since it removes the effects of financing and accounting decisions such as interest and depreciation, it's a good way to compare the performance of different companies via a common multiple, i.e. EV over EBITDA. And it serves as a rough estimate of free cash flow. So now let's take a look at a different question. When calculating enterprise value, do you use book value or market value of equity? The answer is, when calculating a company's enterprise value, you use the market value of the equity because that represents the true demand and supply value of the company's equity in the open market. So now let's take a look at some more questions which you can get on the topic of finance. Why would two companies with identical earnings in the same industry have different PE multiples? Would you use enterprise value over net income as a multiple? What is the capital asset pricing model? What is operating leverage? In a world without taxes, if you issue debt worth 1,000 and pay it out as a dividend, how does it affect your enterprise value? Why might a company be trading at a lower EV to EBITDA multiple than its competitor of the same size in the same industry? Again, essential questions, basic questions on capital structure, and you can find all of the answers in the interview guide. So now let's move on to behavioral questions. And a very common question is, tell me about your weaknesses, or what is your greatest weakness? Now, essentially, this is one of the hardest questions to answer because as an investment banking analyst or associate, you're not supposed to have any weaknesses. So how do you answer it? Firstly, I hate asking this question because no one is going to tell the truth. No one is going to say, I don't like staying awake for 18 hours a day. I don't like working for 24 hours a day. I find it hard to stay focused for longer than 12 hours. No one's going to give a real answer. So how do you answer this question? And essentially, there's a trick to this. You have to give a weakness which isn't going to affect your role. Now, this does differ from analysts and associates. As an analyst, your role is going to be to do analysis, financial analysis on Excel, presentations on PowerPoint, and be extremely detail orientated. So if any of your weaknesses is going to affect that, then you might as well just walk out of the interview room because there's no way you're going to get the job. And on the other hand, the associate's role is to delegate work and to check whatever the analyst has produced. So a weakness such as I can't delegate or I'm not detail orientated, then that's a no-go. Other no-goes for this is I have a disability. No one needs to know that. Or I'm politically left or politically right. No one needs to know that again. That's just silly, the fact that you're going to say stuff like that. Or I'm of this religion or that religion. Again, no one needs to know that. It's a personal question. I've gotten some really, really silly responses to this. And everyone else in investment banking. We've heard some really, really silly responses to what is your weakness. Sometimes we ask this question, not because we care about the response, but just to see the kind of responses that we're going to get. So you don't want to be that one person that every investment banker is going to laugh at the moment you walk out of the interview room. So how do you answer this question? I would say my biggest weakness is public speaking. In the past, I have always taken on the role of making the presentation, researching and compiling, then to actually present in front of the class. Over the past semester, I have decided to enroll in the drama club to boost my confidence in front of crowds. Now, this is a decent response if you're an analyst. As an analyst or an associate, you're not going to be presenting in front of clients because that's the role of the managing director and in rare cases, the VP. So having a weakness of being not good at public speaking is perfectly fine at an intern, analyst and associate level. Now, this might be a little problematic at the associate level, but again, it's a fine weakness to have because it's something you can work on. Another weakness is, so let's take a look at some more fine weaknesses as a junior investment banker. My analytical skills are really strong, but my writing skill could be improved. I'm not a great networker, but this is something that I am trying to work on whilst in business school. I think my skills are very strong compared to my peers, but I am new to the world of investment banking, so I have a lot to work on. So those are some fine answers. Now, as I've mentioned before, your role will determine the kind of responses you give. So as an analyst, one of your weaknesses could be the fact that you're not good at delegating, which is fine because you're not going to be delegating a lot. As an associate, you are going to be delegating, so your weakness cannot be delegation. But if you are in doubt, then take a look at the interview guide and see the list of possible answers for this. Now let's move on to a technical question. Let's take a look at valuation questions. Rare questions on this is going to be to talk about specific transactions which has taken place. Now, you will only likely get this if you've already been in investment banking for a while or have transaction experience. Then you're expected to talk about the deals you've worked on or about a specific deal that's in the press. But more frequently asked questions are going to be about the valuation methodologies. So DCF comparables, present transactions, dividend discount model, liquidation model. Again, try to know the three main ones and try to know an additional two just in case. You can also get asked questions on the specifics of valuation. So why do we lever and unlever beta? How do you do it? What's the formula behind it? Now, more commonly asked question is, how do you value a company? What are the pros and cons of a DCF or present transactions or comps analysis? How do you spread comps? So make sure you know the 3 main valuation methodologies like the back of your hand. You are guaranteed to get asked questions on it. One of the most commonly asked questions is, walk me through a DCF. Now, I've already made a video on how to answer this, and you can also check out the interview guide for those who have it on the step-by-step process on how you would solve this. So now let's take a look at other questions you can get asked on the topic of valuation. Walk me through an LBO model. Which of the valuation methodology will tend to lead to the highest valuation? Walk me through a merger model. Which method of valuation is most robust? What are the pluses and minuses of each method? What percent of total DCF value is usually in the terminal value? What proportion did the terminal value contribute to the enterprise value? Why? And what concerns are there? Explain the differences between weighted average cost of capital and the internal rate of return. How do you treat deferred taxes in a DCF? So now let's move on to a behavioural question, and that is, what do you think is the most important trait to have to be successful in this role? Now, other common questions or variations to this is, what's your greatest strength? Or what do you think is a necessary skill in order to be a great analyst or associate or intern? Now, to answer this, you pretty much have to choose one of the following, or something pretty similar to the following, and be ready to explain why it's important. Having a positive attitude, drive and determination, willingness to learn, capacity for work, efficient time management, communication ability, teamwork skills, and being detail orientated. So let's take a look at a sample answer. From speaking to a few analysts, I know there are a few key traits necessary to succeed in this role. The one that really stands out in my mind is a positive attitude. I know one of the most difficult aspects of finance is the day-to-day grind and the long hours. I think if I keep my head up and maintain a positive attitude, whilst being proactive and not waiting to be told to do things I already know I need to get done, I will be successful. Most of the candidates you're interviewing are probably smart enough to do a good job. What I think makes a great analyst is someone smart and proactive who can also stay positive when the job becomes demanding. A person with this mentality gets the job done with a smile and is going to be easier to work with in team situations, which seems to be pretty common in finance. So that's a great response for that question. And you can also get similar questions like this. What would your friend or classmate or professor say about you? Why should I hire you? Why should I hire you over X or Z person? Why should I hire you when you haven't gone to Harvard or Oxford? What should I know about you that I haven't already asked? And again, all the answers are in the interview guide. So now let's switch our side to technical questions. And now let's take a look at an example of mergers and acquisition questions. And this is a pretty common area. The rare questions that you can get asked on this topic is going to be to discuss a specific deal which has taken place in the public. Either discuss the financing option, the valuation of the deal, whether it's good or not, whether you can achieve synergy or not. But more frequently asked questions is going to be on the topic of if a company with a PE multiple of X acquires another company with a PE multiple of Y. Is this deal going to be accretive or dilutive? But really commonly asked questions on this is going to be, why do companies merge? What are synergy? Walk me through a merger model. Walk me through an accretive dilutive merger model. Talk to me about the steps necessary in a sell-side M&A deal. Tell me what is the difference between a sell-side M&A deal and a buy-side M&A deal. So now let's take a look at some of the questions on this. So a very common question is, what are some reasons that two companies would want to merge? Sample answer is, the main reason two companies would want to merge would be the synergies that the companies could create by combining their operations. However, some other reasons include gaining new market presence, an effort to consolidate their operation, gaining brand recognition, growing in size, or gaining the rights to some property, either physical or intellectual property that they couldn't have gained quickly, or building it on their own. Another very common question is, if a company with a PE multiple of 25x acquires another company for a purchase PE multiple of 15x, will the deal be accretive or dilutive? And for this particular question, you can't tell unless it's a 100% stock deal. If it is, It will be accretive because the cost of acquisition is 1/25 or just 4%, and the seller's yield is just 6.7%. Since the seller's yield is higher, it will be accretive. Now let me just pause here. This question is really common. Now you might not always get an easy response like this, but you might get 1, 2, or sometimes even 3 or 4 questions like this, especially if you're going to go into mergers and acquisitions. So be prepared, and for those of you with the interview guide, make sure you revise and you really pay attention to the M&A questions. Another very common question is, what do investment bankers do on a sell-side M&A deal? Here you have to walk through the exact steps which is necessary for an investment banker to go and sell a company. So from initiation to final negotiation stages. And again, this is going to be probably a 1-minute answer, so I'm not going to give it here. For those of you with the interview guide, I'm sure you've already seen it and you already know it. So other questions you can expect on mergers and acquisitions. Which is more accurate to predict, cost synergy or revenue synergy? What are the pros and cons of a stock versus cash acquisition? Who would pay more to acquire a company, a financial buyer or a strategic buyer, and why? Why do accretive mergers still sometimes see a falling stock price? Talk to me about some hostile deals that have been initiated lately. What is the difference between goodwill and other intangible assets? Talk to me about LBOs versus merger models. So now let's switch our sides to behavioral questions. And a very common question is, where do you see yourself in 5 years from now? Now, the answer to this is going to differ if you're applying for an internship analyst role versus an associate role again. An analyst role is usually going to be a training contract, either 2 years, sometimes even 3 years. So you're not necessarily looking for someone that's going to stay in the long run. However, if you're recruiting for an associate role, then this associate is going to be on the path of becoming eventually a VP and an MD. So their 5-year plan is going to be very different to an analyst. An analyst could get away by saying, I don't really have a concrete 5-year plan now. And that's perfectly fine. Because again, you're an analyst. You're not being recruited to stay on as the VP and MD eventually. But as an associate, the reason why we are hiring you is because we see you as eventually becoming a VP and an MD. So let's take a look at how you would answer this question. So a simple answer for an analyst, I really don't know, but right now I'm just looking forward to working really hard for the next years and getting a lot of deal experience, learning an amazing amount and being a great analyst. A simple answer for associate, I definitely see myself being a great banker for the long term. Right now I am focused on being a great associate, getting strong deal experience and building up my skill set so that I can be an effective advisor down the road when I am hopefully a managing director. Another very common question is, what other banks are you applying for right now? Now this is a way for the interviewer to size up their competition. So we asked this question to see just how attractive is this candidate. Is this candidate being offered interviews at Morgan Stanley, at Goldman Sachs or JP? Or is this candidate being offered interviews at more boutique banks? Now this question will reveal exactly how attractive you are. So be very careful when you answer this question. It will either say, okay, this person isn't really desirable, or this person is really desirable, so we need to take this person right now. But sometimes if you do say you're having interviews at elite banks, some bankers will check this because they have friends there. And from personal experience, I know this. So how do you answer this question? Well, ideally, you need to try to answer this question with like-for-like banks. If you have an interview at Morgan Stanley, then you can pretty much say that you have interviews at Goldman Sachs and JP Morgan. But if you have an interview at a boutique bank, then say you have an interview at Lazard or other boutique banks on the same scale. But the ideal response to this, I am currently interviewing with other banks and hope and pray that they don't ask for any specifics. Because if they do, then you are going to have to truthfully answer who those banks are. And again, stay within the same branch or league as the bank you're currently interviewing at. Now let's take a look at technical questions. And although this isn't necessarily a major topic, but a lot of candidates tend to fail on this specific topic, and that is capital structure. Capital structure is the methodology in which a company finances its operation. If you don't talk about capital structure, then companies just disappear. Capital structure is a topic which is always ignored at business schools and in schools. But in the real world, 60% of discussions is going to be revolved around capital structure. If you don't know how a company finances its operation, then you can't help it. So it's a very important topic. So you have to know the questions around this. So the rare question that you can get asked on this is going to be about specific financing topics. So what is staple financing? Or you can get asked obscure financing methodologies. But again, you're only going to get asked the obscure questions if you already have a lot of experience in the industry. So if you don't have much experience, then you won't get asked any of these questions. But more frequently asked questions are going to revolve around enterprise value, equity value, the adjustments needed to go from one to the other. How would an adjustment in the financial statement affect the enterprise value or the equity value? You have to know enterprise value and equity value like the back of your hand. For those of you with the interview guide, then you know exactly just how much focus we put on this. Now, more commonly asked question is, how would a company raise capital? What are the pros and cons of debt versus equity? What is levered and unlevered free cash flow? And what are the assumptions and when do you use which? So let's take a look at some of these questions. A very common question is, what is enterprise value or what is equity value? So let's take a look at another question. All else equal, should the weighted average cost of capital be higher for a company with 100 million of market cap or a company with 100 billion of market cap? Now, normally you would assume that a larger company would be safer, but that's not always the case. You can find really large companies like GM, and because they are so levered up, their balance sheet is so levered up with debt and liabilities that it costs more for them to borrow. So therefore their weighted average cost of capital, even though they're a larger company, is higher than someone with only a market cap of 100 million. So how would you answer this question? So a simple answer would be, without knowing more information about the companies, it is impossible to say. If the capital structure are the same, then the larger company should be less risky and therefore have a lower weighted average cost of capital. However, if the larger company has a lot of high interest debt, it could have a higher WACC. Other questions on capital structure is, walk me through the company's typical capital structure. What is the difference between EV over EBITDA or EV over EBIT or PE in terms of accounting for capital structure? What implications are there for cash dividends versus stock repurchases? And when would you use one versus the other? How can a company reduce its debt over EBITDA without increasing EBITDA or paying down debt? What is staple financing? Okay, so now let's take a look at a behavioral question. And another very common question is, what other industries or what other group of companies are you looking at? Now, this is a tricky question. And the best way to answer it is to make sure you stay in finance. Give a response that is closely related to investment banking. And what you don't want to say is, I'm looking to get into management consulting or marketing, because that just shows that you're not prioritizing investment banking over everything else. As interviewers, we're looking for candidates who investment banking is their only priority. We understand you're a graduate or you're a student and you need a job, you have bills to pay, we understand that. But from our perspective, we also need to find candidates who their top priority is investment banking. So giving a response like, I'm also looking to get into management consulting or marketing, anything, then that just shows that you're not focused on investment banking. You haven't put in the time and effort to know about the industry. You're not really focused on investment banking. So the ideal answer for this question would be, you're looking to get into a similar field, so equity research or asset management. So let's take a look at a sample answer. Investment banking is by far my top priority, but I'm also interviewing with a couple of firms for equity research roles and asset management roles. Okay, so now let's switch our focus to technical questions and let's take a look at LBO questions. Again, another very, very common topic. When you go into investment banking, a lot of your clients are going to be private equity companies. So knowing how to build an LBO model is essential, and knowing the assumptions and the underlying factors is crucial. So rare questions on this topic is going to be to discuss a specific deal which has been announced. So discuss whether you can achieve the internal rate of return, whether or not the deal is going to work through, and discuss the pros and cons of specific deals. Now, more frequently asked questions on this is going to be, walk me through an LBO model, and what is IRR and MOI. But more commonly asked questions on this topic is, what is an LBO? Tell me the criteria for an ideal LBO target. What types of financing structures are common in an LBO deal? Talk to me about some of the debt structures that you can find in an LBO deal. What are some of the key metrics to measure returns in an LBO deal? So now let's take a look at some common questions. Question number one, which I always ask, and pretty much everyone always asks, is how would you identify an ideal LBO target? Now, price is always the main concern, because with a low enough price, you can do pretty much any deal and stack the reward and return on your side. The more expensive a deal becomes, the harder you have to fight to make the necessary returns to justify the deal and to keep everyone in the deal happy. Other factors we look for are strong cash flow, strong and stable, predictable cash flow, and of course in a defensible industry. Ideally, we want to find a company with an unlevered balance sheet, so as close to zero debt as possible, because we are going to be levering this company with as much debt. So finding a company with virtually zero debt is ideal for us. Other common question is, what is mezzanine debt? It's normally arranged by an investment bank and sold in the bond market. It can be secured or unsecured, depending on how you structure it. Bonds normally will have a fixed interest rate. Mezzanine debt bonds may have a call or put option, and it could also be convertible into equity. It depends again how you structure it. Other questions on LBO is a very common one, which we didn't discuss, is walk me through an LBO model. Again, for those of you with the interview guide, make sure you know this inside out. This is a question where you're almost guaranteed to get. Other question is, what is the internal rate of return with an equity investment of 100 million and an exit equity value of 300 million after just 3 years? Give me the calculation formula. Give me an example of a circular reference in an LBO model. Okay, so now let's take a look at another behavioral question. And this one is, what industry group are you looking to get into? Now, when you're recruiting at a boutique bank, then you're pretty much going to be recruited as a generalist, or you're going to go specifically within this boutique specialty. So if you're recruiting at a boutique M&A firm that specializes in TMT transactions, technology, media, and telecom, so you're obviously going to go into M&A TMT. But if you're recruiting at a bulge bracket bank where they have multiple teams, TMT, healthcare, consumer goods, rate, oil and gas, then it's going to be up to you to give your preference. But make sure that you give a preference because of a reason. So for example, if you're pre-med, then it's easy for you to justify the healthcare team. If your background is engineering and you've just done an MBA, so you can pretty much justify going into oil and gas because of your engineering background. Now, you don't really need to state any specific area. You can pretty much just give 2 to 3 areas which interest you. And again, take a look at my video on the investment banking divisions for all the areas, as well as the interview guide for all the areas which you can select. And make sure you give at least 2 to 3, but you don't really need to. Now, do you need experience or a reason to state some of these? No, you don't. You can pretty much get into them without any prior experience. You could say that you want to go into TMT because of the investment bankers you network with, and because they spoke about specific trends in that industry, it really interested you. So you don't really need any prior experience in order to justify a specific industry. I chose TMT because I'm really into tech, and it worked well for me. I have a friend who is a sport fanatic. He loves sports. So he worked in an area of mergers and acquisition, which deals specifically with football clubs and other sports teams. So again, it's about your passion. What area are you passionate about? Are you passionate about designer clothing? Then go into that area. Or do you like oil and gas? Then go into that area. Are you interested in healthcare or biotech? Then go into that area. What is more important though at this stage isn't the specific area, because at a bulge bracket bank, you're going to be doing a rotation. Either you're going to be rotating from M&A to capital markets or within specific coverage teams. What is more important at this stage is to just get in the bank. So don't focus too much on your response to this question. If you do have a specific preference, then of course state it. But again, you don't need to focus too much on this. Okay, so let's move on to the next question. Tell me about your interests and hobbies. This is a very important question, more so than you might think. If I, as the interviewer and investment banker, have to spend between 12 to 15 hours sitting next to you, I at least want someone that is interesting, that can be entertaining. I don't want a robot. And this is something which a lot of people don't understand. They think that just because they have good grades, great work experience, they're automatically going to get in. No, it doesn't work like that. You're going to be working alongside other individuals. So it's important for you to also have a personality. No one wants to walk into the office sitting next to a robot. And that's just the truth. So it's important that you can communicate your interests, your hobbies, in a way that is interesting and intriguing. Now, don't say something silly like politics or something related to religion. Again, stay away from those hobbies or from those interests. Also, stay away from hobbies which take a lot of time. So if you say that you can't live without going mountain climbing or rock climbing once a month, as a junior investment banker, you are going to have to sacrifice your hobbies. And you're of course going to have some time off, but you're not going to have the same amount of time which you had previously in order to dedicate to your hobbies and interests. So you're going to have to curb your enthusiasm. So some great interest. You like reading novels by Stephen King. You like traveling. Poker is always a great one. Now just don't go overboard with your examples of this. Don't portray the fact that you're a degenerate gambler. No one wants that. But again, it's always show a positive spin on your interest. So tell them how you managed to win a game of poker when all the odds were against you, when you had to substitute in for your friend the last minute and you literally saved the game. Give an interesting story whenever you're explaining your hobby and interest. Make sure that you hook your interviewer in. For those of you that have seen my week in the life of an investment banking analyst, know that I tend to play poker a lot when I'm outside of work. So I gave a lot of stories on how I play poker. Between me and my interviewer when I was at Morgan Stanley, we literally spent 15 minutes talking about poker strategies. So that's a great way to actually spin the interview into your way. So now let's talk about some general awareness questions and some economic questions, which you're almost going to get. Now, this does depend on your background. If you're from a finance, economics, business background, then we expect you to know some of the more complex stuff. But if you're not from a finance background, if you're from an engineering background or a non-finance background, we are going to spend some time questioning you on your awareness of the finance landscape and economics. So for example, you can get questions on what is the relationship between oil and inflation? What is the current price of a barrel of oil? What was the closing price of the S&P, the FTSE 100, the CAC 40? Depending on where you are, you need to know your local indices. So if you're in Japan, you need to know the current closing price of the Nikkei. If you're in France, you have to know the closing price of the CAC 40. If you're in Germany, the DAX. If you're in the UK, the FTSE. If you're in America, you need to know the NASDAQ and the S&P. Depending on where you are, you need to know the local index, the local indices. Tell me about a recent M&A announcement. What do you think the Fed is going to do next? Tell me something that is affecting the markets today. Talk to me about a company or a stock that you follow or recommend. So now let's take a look at the one topic which you're all dreading, and that is brain teasers. Now, believe it or not, in investment banking, we don't have a lot of brain teasers. You'll find a lot more brain teasers in sales and trading roles, prop trading, hedge fund. So for example, you can get asked, what is the angle between the hour hand and the minute hand of a clock at 3:15? You're given a 3-gallon jug and a 5-gallon jug. How do you use them to get 4 gallons of liquid? What is the sum of numbers from 1 to 100? You have a 10 by 10 by 10 cube made out of 1 by 1 by 1 smaller cubes. The outside of the larger cubes is painted red. On how many of the smaller cubes are there any red paint? A car travels 60 miles at an average speed of 30 miles per hour. How fast would that same car have to travel the same 60-mile distance? Now, at the end of your interview, you're going to get asked, do you have any questions for me? The interviewer is going to ask you, the interviewee, if you have any questions. And this is a really important part of the interview. Do not leave this blank. This is an opportunity for you to start having a conversation with your interviewer, to build a memory between you and the interviewer, to actually make you stand out. Have a conversation, build rapport. Don't ask a bad question here because this could tank your application. So some of the questions that you can ask. How long have you been with this bank? What do you like best about working here, or worst? What made you choose this particular group? How do you compare working here with other banks? how would you describe the culture at this firm? Now, this question, how would you describe the culture at this firm? It's really important. If you're going to have multiple back-to-back interviews at a particular bank, your first interview, you can ask this question: what do you like? What about the culture of this bank do you like? And use this exact same response, recycle it to justify why you want to work at this bank in your next interview, and do the exact same thing throughout the whole interview cycle. So be smart when it comes to asking questions. On what type of deal are you currently working on right now? Can you tell me about your training program? What are some things you wish you knew or wished you knew before becoming a banker? And again, never leave this part blank. Build a conversation between you and the interviewer. This is key. I cannot emphasize this enough. In the interview guide, I've dedicated almost 20% of the interview guide talking about just how to build rapport between you and the interviewer. We didn't spend hours and hours on end making that section just so that you can ignore it. One of the most important parts of an interview is building a relationship, building rapport between you and the interviewer. Remember, people do things for people who they like. They don't do things for strangers. It's important that you don't become a stranger in the eyes of the interviewer. You have to build rapport. So what next? If you want to know about all of these questions, as well as the whole list of 700 questions and answers that you will likely get during your investment banking interview, as well as online application questions, phone questions and answers, assessment center questions and answers, then take a look at the interview guide. On there, you'll also find resume templates, cover letter templates, as well as LinkedIn profiles that you can mimic, and a database of over 10,000 investment banks, hedge funds, private equity firms for you to contact for work experience or for full-time roles. Now, of course, take a look at the mock interviews. We've gotten scripts from the likes of Goldman Sachs, Morgan Stanley, JP Morgan, and we've recreated mock interviews for you to practice. And again, make sure you go through them. It's vital that you go through them. This is going to be the most important exam that you have. Imagine having the answers to your exam at university. How easy would that exam be? Now imagine the exact same thing here. Considering that this is going to be the most important exam that you have, imagine having the answers for them. It's really important that you go through the interview guide. Okay, some common question that I normally get is, what do I do if I don't know the question? And simply put, state that you don't know the answer. Don't waffle on for 3-4 minutes and rumbling gibberish. Just don't do that. It shows a bad example of you. What do you do if you only know half of the answer? Well, give the other half of the answer and then just say that's all you know about the answer. And the interviewer is going to help you. Now, it's important for you to ask for the other half of the answer, because if this is going to be one of many interviews you have on that day, it's more than likely you're going to get asked the exact same question in your next round of interview and your third round, fourth round of interviews. So it's really important for you to know this. Ask for the answer. Now, would I ask for the answer if I don't know the answer at all? No, not necessarily, because then it shows that I'm just completely unprepared. And again, that won't be you if you have the interview guide, but for those of you that don't have the interview guide, then now this is of course round 1 interviews. Round 1 interviews are likely with analysts and associates. Round 2 interviews, if you're in Europe, is likely going to be an assessment center, or if you're in America, then it's going to be just back-to-back interviews with the VP, of the associates and MD. Now, with final round interviews, this is going to be the most important interview you have, because your associate might not like you, your analyst might not like you, but if the MD and VP likes you, that's it, you're hired. So it's really important that you go through the final round questions and answers on the interview guide. So how to talk to an MD, how to talk to a VP, topics of conversation that will make them like you, topics of conversations to avoid. Make sure you know those topics inside out. Do not talk about those topics. Don't even approach talking about those topics. Remember, your MD is not like you. Your MD is probably married, they have kids, they have responsibilities, they have responsibility to their clients. They're on a whole different maturity level to you. You can talk to an analyst like a buddy if you get to that stage, but not to an MD or VP. So when you read the interview guide, pay close attention on how to deal with final round interviews. Now, if you have any questions on this, then always put a link down below, leave me a comment, and check out the investment banking interview guide and mock interviews.